Want to welcome everybody back for our third installment of the BankSouth Fraudcast, part of our Q3 Lunch and Learn series. And I'm Bryce McCuin, Director of Marketing at BankSouth. And we're here to tackle a big one, lending fraud and the impact that it can have on individuals, businesses, the local community as a whole. And I'm here with Dawn Taylor, who's our Chief Credit Officer here at BankSouth, and so grateful, Dawn, that you have come to join us for this series and talk about the impact that lending fraud has on the local community. So thank you for joining us.
Well, thank you for asking. Yeah. I'm always happy to talk about credit.
Yeah.
Always enjoy the interaction with you. So thank you, and it's a great topic.
Yeah, for sure. Can you talk a little bit about your role as Chief Credit Officer at BankSouth, and also just for background, how you got into banking?
So my role at BankSouth is I'm responsible for the credit portfolio or loan portfolio. Mm-hmm. Keep in mind that 93% of the bank's assets are in loans.
Sure.
So we have to protect those. We have to make good loans. Mm-hmm. We have to monitor those loans. And because we want to always grade the loans to understand the value for regulatory purposes, we have to make sure the risk ratings are right. So it's a big role, and I've got a great team that does a fantastic job for us.
Yeah, and you've been in banking for a little bit, right?
A minute. I've been in banking a minute. Yeah. But yes, so I started off when I was in college in Atlanta, and it's as a customer service representative and a vault custodian. That's probably not as a job today, but I guess universal banker would be the first, the role we would call that today, and progressed up through the years. And I think I apply that on a daily basis, my knowledge of the pressures that a banker that has to sit in front of a customer every day and decline loans or talk loans or approve loans and negotiate loans. And I think that helps me do a better job.
Yeah, factors in your decision making.
Yeah, absolutely.
Yeah. Awesome. Well, before we jump into the deep thing, deep stuff, want to do a little icebreaker. When you're reviewing loan files or credit memos, are you listening to music or do you prefer peace and quiet?
So, have we been on the phone and you heard music? Because I do listen to music. Yeah. And I love music. And my best job ever was working at Record Bar.
Nice. I'm sure there's some stories there.
Yeah, absolutely. But I do love music, and I do enjoy listening to soft cello music usually when I'm working.
Very cool. All right.
Good question. Thank you for that.
Absolutely. All right. Well, diving in. So help us understand, the landscape. Let's just start out with the basics. When we say fraud and lending, what does that entail exactly? So
just as a basic level, that means intentionally providing or misleading information to the bank so that to entice the bank to make a loan. Okay. So it could be a loan for the benefit of the fraudster or other people, but it's inaccurate information primarily.
Okay. And what are some of the common schemes that come across in terms of the fraud? So
the first category I would say is fraud in housing, and that comes across in inaccurate application. So you're giving wrong income information or history information. Or loan purpose. You could say that you're going to occupy the house, and you're not going to occupy the house. It would be for a for sale property, or it would be for rental property. Those, because the house 1 to 4 family loans might have a more strict loan parameters or loan requirements if it was for rental than it would be for your own personal use. So sometimes that people say, well, I'm going to wire around the switch a little bit
Sure.
and tell a little white lie. But
Yeah.
I think it's important to know that those are wrong things, and you can be penalized
For doing
that.
Yeah. Okay. What are, some red flags that come up on a regular basis, through the process that your team or, yourself spots?
The first thing that would come to mind is information that is just not real, and it doesn't even seem real. An example of that, we looked not here at BankSouth, but a previous bank. We were looking at a loan for her listed employment was a child care worker at a nursery, and she listed her income at $125,000. And that just on the front end, it just doesn't compute. So we did a lot of research. She gave us a paycheck, but the paycheck was fraudulent. And it's easy these days to white out and
manipulate.
Manipulate that. But we spent a lot of time to be sure that we couldn't get comfortable with the loan. And when we went back to the banker that originated that sent in the application, the banker said it did seem fishy. She seemed nervous. She seemed, when she gave me the pay stub, it just didn't look right. And my message today is, if it's too good to be true, probably isn't true. So, and bankers are sitting in front of the customer, and they can, get their intuition, their gut is valuable. So let us know that, and we don't have to approve loans. So if we're suspicious of things, let's talk about it.
Sure, absolutely.
Another is inconsistent stories. So if a borrower says one thing one day and you ask them another tangent question and it's kind of a different story, that's a red flag. It should be a red flag to us. We talk a lot about elder abuse in deposits and other transactions, but there's elder abuse in fraudulent, when we're talking about fraudulent lending.
Sure.
And I want to touch on that if I can.
Yeah, absolutely.
It's a situation where you're bringing in maybe a grandparent, but an elderly person that has assets like a savings account, CD, and you're trying to prop up your credit, or you're trying to use them for collateral, use their asset for collateral. And a lot of times the elderly person just doesn't know how to get out of it. I know right now my mother, she has 5 grandkids, and she'd do anything for them.
Oh yeah.
But she has no business guaranteeing loans for her grandkids. So BankSouth can help by asking to speak with our customer, elderly customer, privately. So you just say, may I speak with Ms. Jones, privately, and say, do you really want to make this loan? And explain that if the loan is defaulted, that we will liquidate the savings account or savings instrument. And and sometimes they might say, I just don't know how to say no. And we can help them by declining the loan. If we don't have a willing co-borrower, we need to, really visit that. If you get in that situation, call me and I can help you.
I think that's a good point, because there's no harm in having a conversation with someone to be very cautious with their funds, right? And just be careful.
Yeah.
And if nothing comes out of it, at least you've made the effort to, warn them that there are things that could be happening, or things that are out there that we've seen. So.
And sometimes, most of the time, maybe it's perfectly fine. They're just trying to help out, a younger person to get started. It's perfectly good loan. But if there are some red flags, just listen to that gut.
Yep. Trust your gut. So the impact, talk a little bit about, fraud doesn't just hurt the bank, it has a ripple effect into other areas. And so we've talked about this a little bit What are the different areas that can be affected when fraud hits at a bank? Lending specifically, yeah.
I would put it into three groups: the fraudster, the victim, and the bank itself, the banking industry. And the fraudster, because this is criminal, so there will be some stiff penalties involved. The victim, so if it's either stolen identity, or in that example with the elderly person, it would be, they're certainly a victim. It could be loss of funds, loss of assets, loss of their identity with the bad credit scores a situation. And then for a bank, not only the millions and millions of dollars that are losses to banks because of fraudulent loans, but it's the loss of a good reputation. Yeah. You and I both saw a situation where a bank was, I dare say, on the front page of that community bank because of a fraudulent loan scheme. And I think the loan was in the millions of dollars. We need to do everything within our power that BankSouth isn't on the front page in that, because that's reputational damage.
Sure, yeah, absolutely. Thank you for that. Now, we've talked about some examples as we've moved along, without naming names, of course. Can you talk about any other examples that come to your mind just from your previous experience?
So I guess you're saying this because we have our best lessons by mistakes made by us and others. So one example is a guy had applied for a loan to purchase a home, and the home was in Florida. It was a $5 million loan. And the loan officer, the originating loan officer, was super excited. $5 million, they don't see that kind of...
Right, yeah, they see the
and it
volume,
looked just too good to be true. So a little foreshadowing here. It was too good to be true. Right. The guy had all this income. He was a real estate developer, tax returns, a robust personal financial statement. He had good equity in the property. So for all on paper, we were going to make that loan. But for a savvy underwriter that decided, because we didn't know the borrower, it wasn't a previous, an existing customer. Not that fraud can happen with anybody, in any situation, but this was would have been a new customer. But the savvy underwriter Googled this, the person, and went to the tax returns and all of the entities associated with this person. And it was unbelievable, all the claims out there and all the lawsuits that were pending or ongoing because of defrauding partners and other purchasers, where he would be selling property and people would put earnest money down and he would just ghost them. But it was unbelievable, the information out there. Now, we declined the loan. Right. And we can do that. I mean, even if on paper it looks good, if the bank doesn't feel comfortable going forward, it needs to roll up. We need to talk about it. Sure. But yeah, we don't need to make those loans. Yeah. Another situation that would come to mind was an inside situation where the bank had a lender that was spoke another language, and he was of a minority in a pocket in Atlanta. And he received all kinds of recognition because he was growing this subset of lending in this community that was hard to, enter into because of the language barrier, I think. But he became an island because of the language barrier. I mean, customers would come in and only speak to him and one assistant. Loan, even at one point, loan documents were in a different language. But over time, over years, it was a massive subset of our lending portfolio. He began to make fraudulent loans inside that.
Yeah.
And he would stack the loans. So one loan, when it would come due, another loan would be made to pay that loan. And it was fairly massive, millions of dollars of losses, huge reputation risk.
Right. Yeah.
And damage to the bank. And I would just say that the lesson learned there is, let's don't be on an island. Let's all be interconnected in our lending.
Right. Yeah. Thank you for those. Yeah. So we've talked about some examples that you've provided, red flags. So what steps can we take? Can these bankers take, lenders take on the front lines to help reduce lending fraud?
First of all, let's have, at some point, we need a face-to-face or at least multiple phone interactions. But we need to, I say know your customer. That's not unique to us and the other.
In the industry. Yeah.
But know your customer or get to know your customer, for one, and verify that identity. I know it's hard to say, I need your passport or I need your, 2 forms of ID or whatever, but that is just so important.
Yeah.
Trust your gut. So if it just smells funny,
fishy,
and we would welcome a conversation where we're saying, okay, well, it might not amount to anything, but let's have the conversation first. Google search. I think there's a lot in the public domain that that we don't take advantage of. So let's do that. And the bank has access to doing a search for public records. So if there are DUIs, not that would be a factor necessarily, but if they have a criminal record, we would see that on the search. Yeah.
Awesome. Well, just wrapping things up, if you could leave every BankSouth team member with one key takeaway when it comes to preventing lending fraud, what would that be?
Well, I sound like a broken record, don't I? You probably know what I'm going to say. Know your customer.
Yep. Trust your gut.
Trust your gut. And don't be an island. So do call us and talk to you. I would love the conversation of just saying, hey, and we want loans. So we want loans that are can be paid back. We don't want fraudulent loans, but we have a acute appetite for loans.
Yeah. Awesome. Well, Dawn, thank you so much. We appreciate you taking the time. I know you're busy. We're all very busy and not just handling fraud, but doing our real jobs.
It's my pleasure.
We thank you for coming in, and we hope that this can be informative. This can be helpful. This content that we'll provide not just for our team at BankSouth, but really for our industry as a whole, for the local community. So we just ask that everybody take the time, know your customer, trust your gut, and help us prevent these scammers from taking funds. So Thank you again, Dawn, and we'll
Thanks
see you
for having me.
Yeah, absolutely.
Okay.